You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are watching the Financial Survival Network. Well, no secret, rates are up and they're going higher. We've got the Jackson Hole confab taking place today. It's August 25th, and for the next couple of days. When Jerome Powell speaks, markets listen, and certainly even when he doesn't speak, when he raises rates, the markets really take notice. Has it all been discounted? How much more is it going to further it's going to go? None of us know, but what effect is it having on housing now? The numbers for home builders been bad, or for new home sales in the gutter. And our mortgage expert, Debbie Bloyd, is with us now. Debbie, great to have you back. So you're in the trenches there. You're in the front lines of the mortgage world. What are you seeing?
Well, I've got closings next week. So I've got families that are finally able to buy houses. They've been looking for quite a while. And so that means they got their contracts accepted at the 1st of August. We're closing now at the end of August. So there's a lot of movement still out there. It's at a more reasonable pace now, thank goodness. The rates have been all over the place, though. We've had them up as high as 6% when we started, down to the fives now, high fours. So they're kind of bouncing around. You have to be able to hit that just right when you do lock a rate. So that's something that we're all looking for. But it's a tamer market now. So more people are going to start coming back out. I think we're going to get to a pace that we're used to.
Okay. So housing costs, though, have reached a new high in terms of unaffordability or low affordability. And even if people aren't worried about your jobs, aren't worried about where you're going to be, still, though, less people qualifying, right?
Sure. Well, with the higher rates and the higher prices, so maybe 2 years ago, you could have bought a $600,000 house. Now that's maybe down to $450,000. So people are changing what they can buy. But again, it's just like, I always go back to saying, it's like cars. Not everybody can have a Jag. And a Jag is not, or a Mercedes or whatever. The prices that we used to have, they're not coming back, Kerry. So we're going to have to get used to new pricing.
All right. So you're going to have to settle for a Hyundai or a Kia, huh?
Unless you make more. People say, what's the secret? Make more. Pay off those credit card bills. Get yourself in a better financial position.
Raise your credit score in the process.
Yeah.
So even in Texas, though, and Florida, sales are getting hit, right?
Yeah, so a lot of the home builders are saying they have all this inventory now, but the reason is because months ago, when they were building as fast as they could, the people kind of disappeared. They had to lease something. If they couldn't buy a house a few months ago, you can't just stay in a hotel forever. They leased an apartment. So a lot of people are in leases that they cannot get out of from last November, December. So I think we're going to see those people. The hope is to still get a house, Kerry, at whatever price it is at the time you're buying. So before this market outrage that we've had the last couple of years, going back to, I don't know if you can remember that far, people seem like this is a new thing. Moving across the country, renting something until you can figure out what part of town you want to buy in. We're kind of back to that.
Yeah, I do remember. I remember back to the crash, been buying homes since 1986. So
yeah,
watch those mortgage rates. Back in 80, actually it was 83. I think I was paying on an adjustable, like 8.5%.
Right. People don't remember those days. They act like everything was like the last 2 years. And before, we didn't even know this kind of a gold rush could happen. People just bought and sold their houses when they needed to. So what we happen to have is a mass exodus out of certain states. We've had people working from home now, and they want to live differently. So you're gonna look back in history and say that was a big uptick in the way people live their lives. And of course, where they want to live changes then when you have that choice.
Right. So demand's obviously coming down. Sales are obviously coming down. Home builders should know better at this point, but they never learn. They're a lot like the U.S. government in that respect. But so they've got all this inventory. The inventory is financed. Now, a home builder near me, it's I would call a medium size, not yet a major, but they're on their way.
Yeah.
They were building to order, but they would build like 5 to 10 spec houses at a time
Uh-huh.
and had no problem unloading them. So they were smart. They're not going to get caught with their pants down. But
Right.
the home builder that just builds a whole community, and if you build it, they will come. So we could start seeing some distress in this market.
Sure. Hopefully, the building of a house and the square footage of most of these homes is going to take 6 months, 8 months, a year and a half to build some of these houses now and these master plan communities. And we still have a shortage of labor. Now, lumber prices have come down a lot, glass prices have come down a lot. So we're getting that surplus back again. But for those home builders that were told to hurry, 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 build, 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 people want houses and you don't have any, they started all these houses. And now those people went into leases and they can't buy right now. So now they're suffering with a lot of overage. And so now they're seeing, I get emails every day from home builders saying, we'll give you an extra $5,000 if you bring someone out to build, buy a house from us. They're doing all these incentives. Well, that's fine. But a lot of times people have to be told, well, you can buy your apartment rent out. So a lot of people, they don't know to even ask if they can do that. I recommend that all the time. Do you know if you can get out of your apartment early? Well, why don't you ask? These are first-time home buyers that really don't know any of the rules of real estate, Kerry, and they don't ask a lot of questions either because they assume that once they sign a lease, it's binding. Well, it is unless they let you buy it out. And so with some of these builder incentives, that money can go towards buying out your apartment lease. And then some apartments have a waiting list, and they'll let you out if they can sublease it for you. So you got to ask a lot of questions. You got to be willing to do the work. And some people don't understand how to do that yet.
Yeah, well, right. That's the problem. That's what we're trying to do is help people figure these things out.
Yeah.
But if you're sitting in a lease right now and you're thinking, well, rates might go up, but prices are starting to come down, maybe it pays to wait to the end of your lease, right?
Yeah. A lot of people think that the real estate market is going to tank. And I see it all over social media. I see it everywhere. They're waiting for the prices to come way down. They're not coming way down. Demand is high. I do a lot of reverse mortgages, and that means that these older citizens that are usually headed to nursing homes, usually assisted living, living with their family, some other way, they usually sell their homes and that turns over neighborhoods, right? Well, those people are not leaving their homes now. They're doing reverse mortgages to stay there until they pass away. So they're staying there longer. And that's
Right.
keeping people in their homes longer, which is great, but it is not the system we're used to.
Interesting. Well, I guess this was all inevitable. Every boom ends with a bust. The difference here is we don't have the corruption of the mortgage industry that we had
Sure.
way back when.
Right.
We don't have these alt A's, these sub primes, liar loans, and
Right.
all that good stuff. So, and the other thing is, after the pandemic, foreclosures have started again in most areas, but they don't kind of like have the vigor. The only foreclosures that really they kick you out and they move ahead are the tax deed foreclosures, but mortgage
Sure.
foreclosures, it looks like everybody's lost their appetite for the process. It's dirty. It's a bad process. So maybe some of the second tier lenders or the banks resell those defaulted mortgages, and then you have investors take them over. But the banks themselves, who are the biggest initiator of foreclosures back in the housing bust, don't seem to want to do it anymore, Debbie.
Don't just survive. Thrive, the Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million-ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well-positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, there's bad PR associated with kicking someone out of their house now. You know how after COVID, I've had several clients refinance their homes to take cash out or reshuffle their debt. And what they're finding is their payoff is a lot different than what they tell me. So I just had a closing last week. The payoff was $50,000 different. And the clients didn't understand. Well, you know what? They did not pay their house note for the 18 months of COVID. And they took that money and put it on the back of the loan. So that $50,000 that they didn't pay all that time got put on the back of the loan. So their payoff is more. They totally forgot about it. They just forgot. And so banks are more than willing to do that modification and move it to the back. They're going to get their money when they sell or refinance. So don't worry about the banks. They're going to be fine. Yeah. But the people do not have to be kicked out quite the same way that they did before. We didn't have that sophistication back in 2008.
And it was a very inefficient system. Eventually, the property prices bounced back. For whatever reasons, we could argue Federal Reserve policy, whatever, but they did come back. And the later foreclosures that the banks took, they cleaned up on. They made a fortune.
Well, now, so much is PR and social media. If someone gets foreclosed upon, it's not going to be their fault. And then whoever is doing the foreclosing, whether it's a company, a big or a little one, they're going to get a lot of bad PR about it. So we want to give people more chances, I think, now than ever on this stuff. Because, when you and I were growing up, not everybody got a participation trophy. There was winners and losers, and that's just the way it went. Well, now everybody gets a trophy. It's good for everybody. So I think the strategy has changed a bit.
Yeah, I love that. Participation trophies. It reminds me of my child rearing days. Yeah, so everybody's special. But yeah, there's a policy. There's a definite policy against kicking people out because the politicians hate it. The courts don't look good.
Yeah.
The media loves it because there's poor victims.
Yeah.
Taking their house. Oh, but you didn't pay for it.
Right. There's that. I have seniors that I try to talk to about leaving their homes, use that money for other things and move in with somebody else because it just makes financial sense. But they will do whatever it takes to keep what's theirs. And I think as my clients get older, they get more upset about being forced to sell a home, even if that's the best thing for everybody concerned. They can't manage their finances. So, it's a sad situation when people don't know how to manage money. And it comes back to education. They just don't know. And they don't know who to ask, Kerry.
Hey, well, really, they're trying to keep what isn't theirs because once you default on the mortgage, it's really not
yours anymore.
Yeah, it's the lenders. But they just don't seem to look at things that way.
They don't.
Yeah. So that's definitely an issue that will stop this from becoming a housing bust like in 08 and 09.
Yeah.
And it'll be a more stealthy bust because they'll just let them stay there. They'll forbear, whatever it takes. They'll just work with them, which is probably what done before. Strategic defaults, I'm not so sure. Remember when people saw their house was upside down in price, negative equity, they said, why keep on
paying
the Titanic there?
Yeah.
Refueling the Titanic as it's sinking. And sometimes, initially in the bust, they moved out right away. But later on, they got smart and said, there's millions of foreclosures.
What are you going to do?
I know a person in California and she has been fighting her lenders for 13 years and hasn't made a mortgage payment. And she's actually got
Wow.
equity in the house now.
Oh my gosh.
Yeah, I don't think she cares about the house anymore. I think she wants to get into the Guinness Book of World Records. How many years she can stay in a place without making a mortgage payment.
That is crazy.
Yeah, and the courts, it's also the lenders, like, they didn't move until recently. They sold it, and now they're in litigation. But, you have deed of trust in California. So basically, hey, you have a trustee sale, no judicial foreclosure. So unlike states in the East like Florida, New York, where we got judicial foreclosure. Well, so getting back to the matter at hand, what about the substitution effect? Are you starting to see people take lesser homes to save? Is that
and they don't like it. Yeah, they're saying that that's unfair. But you know what is crazy is, you can afford what you can afford. You don't see people rioting at the Range Rover store because they can afford a Volkswagen instead of a Range Rover. You buy what you can afford. And not everybody is entitled to a $500,000 house. They're just not. And if you can't afford a house, then stay in an apartment or lease something. But this has I've always been like a kind of school of hard knocks, where if you can't afford it, you don't buy it. Nowadays, people cry wolf about that. And they just say it's not fair. It's not fair that we can buy a home. Well, then, a home is not a God-given right. It's an opportunity. But you have to take care of your credit. You have to have some money to put down. So you just have to make yourself better. That's what I end up telling people, and they don't necessarily like that.
Hey, and that's really what it's about. So, Deb, we want to connect with you on the web. Where do we find you? Where's the best place to go?
Well, I'm doing a lot of business on TikTok. So you can find me at the Dollar Diva on TikTok, on Instagram and Facebook. My name, Debbie Bloyd, and DLB Mortgage Services. I also have Dollar Diva Coaching. So now I'm coaching families how to get them in the right frame of mind to purchase. A lot of people just don't know. They don't know.
It's interesting, Debbie. You see these financial coaches popping up all over the place. Real estate investing, all these different things, fixing your credit, coaching. Because basically you could tell people till you're blue in the face, but until they actually have to put out some money and really pay attention, you're kind of falling on deaf ears. But this points to a bigger problem. Like you said, people aren't educated. You didn't get the financial education you needed in school, and your parents, they were too busy and they didn't know anything either.
Sure.
And that's why you're in this mess.
Right. And it's with, I do life insurance for families. I do a holistic approach on all the things that they need to do. And, most people don't even understand the basics of insurance. I had a guy call me yesterday and he wanted insurance. He said, I need your help. I need to get life insurance because if something happens to my house and it burns down, I need to, I'm like, dude, that's property and casualty insurance. You have a mortgage, you have that. They won't let you keep a mortgage without it.
Yeah.
It's like, so then what do I need? And I'm like, I don't know. Let's just take it from the top. So
they need everything.
Yeah.
They needed everything.
Yeah. They don't know the difference between mortgage insurance that you pay until you have 20% equity, property and casualty insurance for your house that burns down, or just life insurance to pay your mortgage in case something happens to you. So yeah, I kind of work on all facets of that, but really financial education is what we're after. People need to understand what all this means, because when they get to be 70 or 80 and then they call me, what I find out is they don't know any of this stuff.
Wow, that's remarkable. Well, we'll leave it at that. So like to know your opinion, shoot me an email, kl@kerrylutz.com. Are you looking for a house now? Did you get outbid? Have you been having problems getting a mortgage? Share all that with me. Like to know about it, kl@kerrylutz.com. Make sure you go over to the site, sign up for your free newsletter, financialsurvivalnetwork.com. Debbie, always a pleasure. Thanks for stopping by.
Thanks so much.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network. Now, more than ever.